Welcome to the IR Digital Podcast. IR Global is the largest international professional services network. I'm your host of the IR Digital Podcast, Jennifer Riggins. Today we're sitting down, virtually of course, with Torben Welsh about how after a brief pause, the positive change that's been happening in mergers and acquisitions, driven by this awesome rush to innovate, and the value of the people running these businesses for sale and investment creating additional value. So how about you tell us a bit about you and how you made it into such a niche?
Yeah, I have been an attorney for about 20 years, working in Colorado, New York, and Utah, where I'm based out of. And as I started off my practice, I began to become more and more involved in the corporate world and helping as general counsel, outside counsel for companies as they kind of try to develop their assets, an asset strategy, a management program, and growth profile. And so as I began to do that for companies in a variety of industries, including the tech industry, the restaurant industry, and then in the real estate industry, being involved in deals that kind of expanded from very small acquisitions to much larger acquisitions. I've been able to help them navigate those waters and then turn into general counsel for a lot larger companies and kind of seeing where they go next, what their next growth move is, and how I can help them manage whatever situation and scenario that comes up in their business as they try and add more people, more products, more services to their clienteles.
So Torben, how did you decide that this was the good fit, and how do you manage what seemed from someone having grown up in the US, three very different states and very different economies? What type of target industries do you work at, and how does that factor into your business?
Yeah, everywhere that I practice, there are different industries. And in New York, I do a lot of finance work because that's where a lot of the banking is. And so we help them as they actually look into their clients who are either looking for loans or expanding or making these moves. So we represent a lot of them. And then as it kind of transferred back over to the West, the Mountain West, Colorado is when I was actively participating in the office there. For about 15 years, it was a growth economy. Everything was happening. A lot of tech industries were coming in, and it was just booming into industries that were specific to that region and specific to a mountain environment. And so through that time, we worked with a lot of startup restaurants. And then so we started from Chipotle Mexican Grill, and then expanded into a lot of other restaurants, Mad Greens, and different ones that now have become based in Denver. And Denver really is kind of the fast casual mecca for restaurants. And so as that became something that we began to do and helping them on their corporate side, their real estate side, it became obvious that there was a need as the tech industry was slowly moving away from California to different areas, and a little bit in Colorado, but an area in Utah called Silicon Slopes, where a lot of the companies had come. And so as I began working with those clients, kind of from our home base in Denver, it became very important to open up an office in Utah to be closer to them. And I had graduated from the University of Utah, so knew the area well. And as we came here, it became really a good fit for us as we were representing startup tech companies primarily, as they were looking to make their next move from either pre-seed or Series A rounds of funding into B and C, acquiring different companies, acquiring different services, and having a bigger footprint wherever they were. And Utah was a smart place for them. The level of workers and employees that they can find here in Utah are all very highly educated. The cost of living is very low. So it kind of combined the best of a lot of what was happening. And so as we stepped in as a law firm, already having a few clients, but then coming in and saying, hey, we can bring this broad base of what we have done over time and from coast to coast nationwide. We can offer you services that are probably a lot less expensive than you would otherwise pay on the coast. You get the same quality and the same type of attorneys who do that work day in and day out. We just happen to be based here in Colorado or in Salt Lake to help service those clients. So it turned into something that the clients have been very receptive to. They appreciate that we are focused on helping them grow, and they're not having to pay rates that they would otherwise have to pay if they're in a different part of the country.
And frankly, nowadays, I think remote work, especially with things like this, will become the norm. So no one will be fussed about it anyway.
Yeah, no, absolutely. I do a lot of my work in New York. I've expanded internationally, do a lot of work outside of Salt Lake, have clients in Florida that I represent. So, I mean, it just kind of goes there, but it comes back when you need a people and a touch point somewhere. It's easy for somebody, one of the big companies here, to just call me, and I'm 10 minutes away. So.
Oh, that's fantastic. Yeah. So obviously everyone wants money, but how do you know you're ready for investment or for being sold?
Yeah. So from an investment perspective, as we work with startups, we always start off with the founders. And the founders are the ones that are just incredible people, come up with a great idea. They're entrepreneurs. They're trying to go. They may have come from other industries and just touched on something they want to do. And so from a funding perspective, most of that funding is self-funded. So most of the clients I work with are going through their bank accounts, they're cashing in retirement funds. They're doing everything they can to kind of get this baby up and running. And that's not unusual. It happens a lot. But at some point, these people need to either focus on building their business and not having to worry about the finance on the side. I mean, I have clients that every Friday are worried, how are we going to get payroll in there? And they spend a lot of time doing that, and it takes away from either the mission of their company or what the services they're trying to perform. So when I tell founders, when you get to the point where you're focusing way too much on not on your business and not on development and growing, but trying to figure out how you're going to get more money, that's a good time to go do a seed round. That's a good time to go find some investment that's out there, somebody that's going to support you and get the right person in play to help you grow not only financially the business, but take it to the next step. The bigger, more established companies, as they look through the seed rounds, either seed A, B, or C rounds, what they're looking for is, we have a product, we're now viable. How do we get out there in the market? How do we find the people that aren't our friends and family? We're kind of past that initial stage. We need people that can either help us with some aspect in the business world or are willing to help instruct us on managing a company and expansion and helping it grow. And so that's where a lot of my clients are now. They're right in that 2 to 10 million phase of the startup process. They have a product, they have some services going, they're doing revenue, but now it's time to expand. I mean, the 5 founders and the 4 employees that they hired is not going to cut it anymore. And so that usually is what ends up driving the funding and seeking investment dollars. Is we just need more bodies. We need that human capital to help us grow to where we want to go. And that kind of kicks people off and has them start thinking about it. And that's the best place to start. And when you do that process, at the end of the day, you get to the end and you're like, we needed that money, yes, to help kind of grow internally, but we needed that to expand our footprint, where we're going, different markets, how do we attack, how do we get new sites and that kind of stuff. So people learn early on that there may be one reason why they're seeking investment dollars. At the end of that process, when that money actually comes in, they realize, this is probably better put elsewhere in the business to help us actually achieve what we're trying to do.
So I guess a lot of the times they're looking to expand their engineering teams, which are very high ticket salaries, but then they find out, no, they need to really invest in the marketing and sales that they haven't really thought of before.
Yeah, that happens a lot with the startups, especially the tech guys. You're right. It's the engineers that they're trying to either bring from overseas, get them here in place so they can kind of do that and have them on call all the time or something. And they think that's the magic ticket. That's our golden ticket, is get the engineering team going. When they do realize, okay, our SEO program needs more help. We need to actually go invest in some better equipment. We need, a much bigger server room. We need, things like that starts happening, and they realize that's where it needs to play. And so the marketing side, the SEO people, the directors of marketing, the CMOs that usually come on at that phase, because they have a service that they can offer, and it's more valuable as they're trying to do growth.
Mm-hmm. And of course, as increasingly, I'm sure your businesses are in the AI or machine learning space, that involves a ridiculous amount of cloud storage and processing power that probably a baby startup can't afford anymore.
Yeah, they can't afford it. They think they can. I've had many clients that actually go out, and that's where they put their initial money. You're like, guys, now you don't have anybody to run it. You don't have anything to do that. So you have to kind of adjust that. But those are learning processes that the founders go through, and to get the right people involved with them. As soon as they start asking for money and reaching out to investors, I am surprised how many great lessons are learned during that process by these founders. They understand where their strengths are. They understand where their weaknesses are. They understand if there's a problem with their pro forma and their business plan. They understand if it's really good. They understand if their growth projection is going to be influential to outside people to help grow the business, or if it's going to be detrimental, and they need to rethink that. So all of these things are the unintended consequences of actually just needing some cash, and they learn really well from that process.
I guess it can be very humbling, but anytime you have to ask for money, even from a family member or for a loan, it's a very humbling experience that you never forget and you learn a lot from. So this is just at scale.
Absolutely.
But then now we have this time of uncertainty. For the tech businesses, probably they had a slow down period than the restaurant side of the businesses, but you help them value their company, like to create a number of looking how much they need for investment and what they need to give up, whether it's equity, etc. for that. In this time of uncertainty, how do valuations and projections differ?
Yeah, so as we've seen over the last 18 months and since March of 2020, you can create value simply by being innovative. And it really doesn't mean, the tech industry needs to innovate. It's whatever practices, whatever procedures you have in any industry. If you can innovate something there with what you do, take your one thing that you do best and do it better, you can create some instant value there. And we saw it a lot, especially with some of these, the restaurant industry, for example, as hard as they were hit in the early days of the pandemic, out of that, we got some great delivery systems that came of that. We have kitchen staff now that are much more experienced and can understand how to get orders in and out really, really quickly. Certain restaurants developed a second or third kitchen. We had talked about ghost kitchens before, the innovation that came out of this. The apps and the websites, if you've looked at those from the restaurants that are actually doing direct delivery or direct connection to one of the delivery services, where you can order through the restaurant app and then it connects automatically to your DoorDash or to your Uber Eats or something like that. Those apps have innovated to the point where you can now have real-time chatting with client service representatives as you make your order. You can do different things. And so it's funny how innovation from the pandemic has changed these industries. And then when we get back into looking at them, 6 or 7 months down the line, where some of the deals that they had started trying to talk about, some acquisitions and some additional funding that got put on hold, we come back and we realize, okay, maybe what we thought was your point, just a good sit down restaurant. Well, your value has increased because now you have the tech, you have the IP, and you have the know-how that you are now valuable to somebody else coming in, that you can help them do the same thing that you have. So that you can easily create value simply by being innovative. It's easy to see in those industries, but even some of the office industries, they learned how to manage human capital outside of the office 24/7, how to set certain things up, how to utilize Zoom, how to take Zoom and Teams and BlueJeans and some of those other video platforms, how to utilize that as a client development tool, how to utilize that as an internal checks and balances, how to actually market from those type of services. And that has created more value for these companies, because now I know several companies that had nothing to do with marketing before, but now figured out a way internally to make Zoom calls really, really effective, and how to share and how to get stuff out to their clients. That now that has become a whole division of their company. How do we utilize what we learned during the pandemic and get it there? So when outside people come in, they say, well, that's increased your value. So instead of just being worth X, now you have a couple multipliers on there, because that's something that we can incorporate in. Or as you're looking from the loan side of it, it's a whole different business line now that a bank or an investor can come in and say, now you have a separate line of business where revenue can be generated and it can come through that. That's not what you had 6 months ago. Let's go back to the drawing board and see if maybe there is some additional room for us to help grow this business, or utilize our contacts in the industry who may be able to take what you've innovated and create something more valuable from it.
A lot of this innovation is cost cutting, because you're not traveling anymore. You may be downsizing or getting rid of an office. Restaurants may be utilizing outdoor space that costs them nothing or significantly less. Things like that. Do you find that companies are asking for less money now because they know how to do more with it?
Yeah, I think they are a little bit. They understand that. What I try and tell people is, as much as the innovations occurred and as much as your books ended up looking pretty well at the end of 2020 and halfway now through 2021, your books look good. Remember, your costs have gone down too. So you need to realize this is not a typical 18 months that we've had from a business perspective. So even though you may sit here and think, yeah, our value's gone up, but our actual cash outlay and the nut that we're paying is less, and this is going to carry on forever, it probably won't. We know it won't. And you're talking about like restaurants that have been able to access streets to put tables on, and that's their new outdoor patio area, and they don't have to pay for that. That's going to shrink really, really quickly if it hasn't already, and so that's not going to be there. So what does that mean? It means they're not going to get the same amount of customers coming through. Hopefully they have other options to do that, but the cost side of that is going to fluctuate. And so I tell people, don't count on what your costs were as you're trying to determine your business and your next move. Think about what it was in 2019. Let's compare them. And what have you done to increase your services? How have you made yourself more valuable there? And then let's go borrow the costs that you were doing in 2019 and add it to your new pro forma, and let's see where you go there. And that's what you need to base your decision on. Don't base it simply on, well, we didn't have any costs, but our profits were high, so therefore I don't need enough. You might need to, use what you did good business-wise to your advantage, but don't undersell it when you know, and everybody kind of knows, your wages went down, your delivery costs went down, lots of things may have decreased, and they're going to come back, and when they do, you want to be prepared for that.
And also the cost of employing people has gone up, both in the restaurant industry that are finding they need to go to what some states minimum wages, not federal minimum wage, of maybe 15 an hour, offering some sort of benefits, things like that. And certainly in tech, there seems to be no cap on salaries. The tech talent cap for hiring keeps going up and up and up.
Yeah, absolutely. We see that all the time. And that's going to continue. It's a trajectory that started 10, 15 years ago on the tech side, and it's going to continue because now what we've learned is tech kind of drives lots of stuff. Doesn't matter if you're not in the tech industry, you're going to rely on tech for something and you need it. And so there's always going to be a marketplace for that. And if there's a marketplace for that, you're going to pay your coders a lot. You're going to pay your managers a lot of money because they will help you in your industry. And that's great. And on the restaurant, the flip side, you're right. I mean, you have to attract employees, and it increases, get your wages higher. So a lot of my restaurant clients, if they're not some of the national brands, if they have 10 to 15 to 20 different locations, they're competing high, and they're making a lot of promises to employees, and they're still having to struggle today bringing in employees. But as soon as that kind of flips around, it's going to be imperative on them that they realize what that cost is, how to control that, and how to better get the people that have been loyal to you through this to continue to work for you. The industry has about 100% turnover on employees year over year anyways. At some point, you need to stop it. A good way to do that is wages. That's what the market economy helps us do. And so I think you're going to see the more successful restaurants are going to be the ones that can retain employees longer. And they retain them by the benefit package, and the wages are going to be a little bit higher, well above and beyond the federal minimum wage that's out there.
And to be honest, as we go back, we're not missing eating out for the food that much because we do get exceptional delivery. We're missing out that point of contact, that point of personal connection. So having a wait staff that we know regularly, having our own cheers is more of what we're looking for anyway. So that does create added value in return customers, because even if you are a chain and you have certain standards, it's people that are selling that food.
Yeah, it absolutely is.
I'm sure a lot of your business is advising people on what type of investment or even partnership or acquisition they're looking for. What type of advice are you giving them, especially in this time of transition, we'll call it?
Yeah. So, pre-pandemic era, it was a little bit of both. It would be equity. It would be convertible notes. It would be borrowing money with the intent of paying it back on a longer term. I mean, there was a lot of different options we had. Right when the pandemic started, and for the deals that were in play and practice, where they either got put on hold or after a few months we had to redo what it was. Initially, we saw nobody wanted equity, at least in the deals I was working. They're like, we're staying away from equity. We'll give you cash, but we want a note. We want to make sure it's there. We're still going to put a member on your board. We're still going to control that aspect of it, but we're going to take a percentage of your revenue coming out, and we're going to do that until we're paid in full. And then we're going to kind of help teach you up and kind of go, which is fine. It happens a lot. But as the pandemic started to kind of get more deeper into it, but the economy started to climb back a little bit quicker in some industries that people wanted, especially in the higher space industries where we were seeing a lot more of the M&A work happening. The equity provision came right back in really quickly. People began to see, hey, there is going to be an upside. If you can turn a profit now, and then I can acquire you, and I can give you some money and get into that and take a share, a 10 to 15 to 20% share of what you're going to do from that perspective, and you continue on the trajectory that you're on, well, that's going to be a much more greater windfall for me as an investor, and I can passively do that. Where 6 months ago, as we started the pandemic, it was more important as we'll give you the money, but we're going to be strict on our repayment terms. We're going to make sure we get this kind of back. So they began to see, looking inside the companies, what they were doing. They saw the innovation that was happening. They saw the dedication from entrepreneurs that we're going to continue to force forward. We're going to blow through this. This is a hiccup that we have, and we got to get through this. And so when you see that personal side of it, the investors that were coming in that I was dealing with, they would come and they'd ask me, what do you think here? Do we do a note? Do we do an equity? Do we do some other type of investment? How do we kind of do that? Suddenly it became everybody wanted equity. Nobody wanted their money back really quick, because they knew there's an end to this tunnel, and when it happens, there's a potential for a windfall. So I think it really comes down on a case-by-case basis, who the people are involved are. Like anything, it does still boil down to you as an investor. How do you deal with your founders? How do you deal with the CEO? How do you deal with the C-suite in these companies that you're looking to either invest in or to bring into your kind of circle of companies? And if you get on with them well, then it's just, well, how well of a business is it? Where everybody was looking to the balance sheet initially to make that decision. Do they need quick cash that I can pay back and I don't have to be involved? Or do they need an equity member that actually can help them direct it? It's now gone more to the personal side. So they're kind of talking through those issues first, and then looking at the balance sheet to make a better decision. And that's been the biggest shift that I've seen, especially in the last probably 9 months since January of 2021. That's where we have seen people actually trying to get more understanding of the people behind the business, then making a decision, do I want to partner with them? Or is this a good one where there's going to be some revenue? I'm just going to give them a loan, and then we'll see what kind of money comes out.
Oh, wow. It's like gambling, but really on the future and trying to build the future. So it's a very positive and intriguing field you work in. So 2020 wasn't just about a pandemic and the economic consequences of it. There were a lot of other things going on. There was definitely a social reckoning following George Floyd's death. There was a push for diversity, equity, inclusion. There's also, we have a climate crisis. And are these things changing any prospective buyers? Are they looking for something different in a company now? Are they looking for certain technologies? What are they looking for now that they're excited, they're hungry to invest in?
Yeah, so all of those things did kind of impact, I think, the companies that people were looking at and experiencing in. And so for a short time in the summer of 2020, after the George Floyd issue happened and the protests everywhere, we saw a lot more companies actually asking us, hey, can you take a look at something that has a social justice, social justice intent behind it, something that we can get behind to do that. Now you have the nefarious ones that come in there, and they are looking purely as from a pure marketing standpoint. You know, I'm in this industry, and if I can tell people I've invested in this company, or I'm helping a minority-owned business or a woman-owned business, or I'm doing this, that's going to be beneficial for me. Go find one. And there's definitely those kind of clients out there, and there's people that do that. But that is take advantage of the situation. I think the people that really understood what was happening and understood where business is going to go, because the pandemic did change kind of how people were working with each other. But when those social issues began to rise, the people that were in the know, the people that were a little more forward thinking, were able to understand this is not a 3-month thing. This is going to be something that we need to continue to build on, and that we have been building on. And so they look at it from a different perspective, go in thinking, help me find a good business. If I can find one that is minority owned or is woman owned or is veteran owned or ticks some of these boxes, even better. And if they're not in a good business, what can I do if I do acquire it is a full takeover? What can I do to make the business? So I had a lot of clients that would come and they would bring LOIs and memorandums of understanding to acquire some of these businesses. And that's why they looked at them. What are these businesses going to do from a social justice standpoint, from the ability to connect with the public on some of these issues? Let's go in there. And then if the finances work, let's see who the people are behind it. And it was surprising to a lot of them that they found out that, maybe the forward face of the business was what it was supposed to be in the world, but you go behind it, and you still had the same old partners, same old players. It was everybody they were talking about. So they said, we can probably make this a little and truly turn it into something that's a little more important. And so I've had plenty of clients who have acquired businesses, not with the social justice aspect in mind, but knowing that this is something that would appeal in the social justice world and kind of how business is changing, and they could bring in the right people to make that kind of aspect continue to grow. I think at the end of the day, people are always, especially on the mergers and acquisitions side, I think all of that probably is going to remain secondary. If the business is a good business, you're going to have people that are going to buy it no matter what. But I think the vast majority of business owners today, investors today, venture capitalists today, they'll look at the business and see if it's a good business, and then they lay out 3 or 4. And then that becomes a secondary issue. Of these 4 opportunities I have, what kind of aligns with my thought process? Am I somebody that wants to invest in sustainable companies that are helping the environment? Well, then that takes off 2 of these from the pile. And so I think that's how the investors that I have worked with over the last few months, that's how they are viewing it. So instead of kind of targeting one company, I've seen them actually target some of these smaller ones, 3 or 4 different companies. Let's get the financial fine for it. And then let's figure out which one do we want to kind of put our horse behind, where do we want our money in? And I think that's going to continue. It just seems to make sense. It's kind of how they've shifted. And it's those companies that I like working for. I mean, they're not out there trumpeting that we're only giving people money if they're fit into one of these little things. What they're doing is we're taking a company in an industry that's well established, and we want to disrupt that industry through making sure we have a minority owned company, making sure we have a majority board of women, making sure that we are focusing on sustainability. How are we going to shift what we're doing in this industry to make it happen? And then that becomes their mission and mantra. And those are the companies that are fun to work for, but those are the ones that have kind of figured out how to do this. It's not just kind of bending to whatever wind the social arena is pushing out at you, but it's actually getting down, figuring out why that's important, how to make it important, and how to change, not just on a company by company basis, but to change an industry. And we've seen that in the restaurant industry with sustainability, with recyclability, with minority owned companies. We've seen that in the tech industry, where I'm seeing more and more majority women board members on a board, running a company, helping advise, helping to understand. So we've seen that, and I think that's going to continue. And I think it's an exciting time to do that, as long as people understand, even those people that come in, my clients that are looking, hey, I'm in a minority owned business, how come I'm not getting money? We're still a business. It's that second part you have to do first. You have to make sure you're a viable business. And then with that other aspect of it, you'll be able to be successful.
And we all know, full circle back to the point, that the innovative businesses are the ones that are selling. Statistically, the more diverse business is going to be the more innovative. So it just fits in together, and it's good for business. So when you see the good business, hopefully the person behind the curtain is innovative and from different backgrounds, and just fun to work with, because that's the point, especially if you're matchmaking these companies, they need to want to work together. So I'm sure that can happen. So we are wrapping up another year. That went fast, didn't it? 2021. What do you think is the most interesting thing you learned about 2021? And in your industry, what do you think is the thing you're most looking forward to?
Yeah, so I think what I've learned in 2021 is there's many different ways to do business. I think we initially learned that in 2020, everybody was like, okay, everybody go work at home. You have your home setups. It was kind of not usual for that. Depending on the industry, you needed to be where you're in your place of business a little bit. And I think everybody said, we're going to get through this. Though. This is just going to be temporary. I knew clients in many different industries that had, I'm going to work from my kitchen table because I'm going to do it for 3 or 4 months. No big deal. Let's move on. It's turned into more of that. But as we did that, it turned out that people can be successful. People can be productive no matter where they are. So it's really changed the way people do business. And that's probably the biggest lesson I learned from 2021, where I don't need to jump on a plane anymore to go see my clients in New York. I can get on a Zoom call and we can accomplish almost everything. We're even more productive. And we see each other. We still get that interaction that we need. It's not the same. And so when I do get out, I've been getting out a little bit more, doing a little bit of travel. It's good to do that. But at the end of the day, you sometimes wonder, I probably didn't need to. We're now to the point that we can do business, operate without actually having to do all these things. We can use the technology that's been provided to do that. So that's been fantastic, especially doing due diligence on deals. Sending people out to walk properties. We have video cameras now that kind of go around, and drone videos that'll go over if we're trying to purchase a big parcel of real estate. It's not like the old days where we had every business person walk around and see every aspect of it. And then you had the surveyors come on, and then you had the construction guys. The business people can kind of monitor that and don't need to be kind of there and still get the same benefit they have. So I think for me, 2021 was all about seeing how different ways business can be successful in the ways that people work. I am looking forward to a little bit more normalcy. It's always good to kind of get kind of back to having a standard routine. And that's the one downside of the way we work now. I haven't found a routine that makes it the same way. Yeah, I get up in the morning, sit down in my home office, answer some emails, depending on the day, hit the real office, maybe go visit a client, maybe do this kind of thing. Somebody says, take a call from the car. I mean, that's how business kind of is for me personally in my business. But I like having kind of, a little more certainty where I know people are going to be, where we can kind of meet on certain things virtually even, but here's kind of what we like to do. So I think as people get back to the office, get back to having in-person meetings, get back to doing those things, I think it'll be helpful. But I think it's important that we don't kind of unwind what we learned. I don't need to see everybody every single day. That you don't need FaceTime anymore to do, and not FaceTime, but actual, speaking with the people directly as much as you need to. That doesn't make you a better employee. It doesn't make you a better boss to go check people's offices. So I think is from just a working standpoint, the innovation that happened with the tech to make it happen, to make work function is very good. As it continues into 2022, we'll see that people are starting to do different things. I think it's just going to open up more possibilities. We're going to have happier employees. We're going to have people more enjoying what they're doing, more willing to engage a little bit more because there's multiple avenues to engage. You don't have to wait for that lunch meeting on the third Tuesday of each month to meet with your team members. And in doing that, what that means is the investors that I work with, the clients that I work with, are going to have more opportunities to understand who they're reaching out to, what deals can be made. And I think we'll continue to see the great M&A work that's been happening over the last few months just continue, because now it's easier to get deals that happen, easier to see somebody's face to make that work. And the end game is going to be the same. And I think people will enjoy that.
And it's certainly probably better for, especially in the tech industry, which has more introverts. They're not going on stage and having to pitch to a crowd of people one-sided. It can be a one-to-one Zoom and have a more quality experience that doesn't put someone literally on the spot.
Yeah, I think it's a great equalizer. I mean, everybody's now having the same chance. And so if there's some aspects of how we used to do business that you don't like, well, guess what? There's an area for you, and there's a way to do it, and everybody has that opportunity. And so I think it's exciting for a lot of people, and I'm looking forward to seeing kind of how business itself shifts over the next year as people try wanting to get back to normal, but still have this new normal that they've talked about, how those combine and how we get business moving forward, how the industrial side of it works, and how commerce is affected.
It sounds like you've thought a lot over the last year and a half, and you have us feeling a bit hopeful for the future, and for investors, I'm sure, that are listening are feeling hopeful too to work with you.
Yeah, I would love it. If you need anything, please let me know. Investment's going to be great. 2022 is going to be a great year. And so there's a lot of opportunities, and we're happy to help whomever we can.
If our listeners want to touch base with you to learn more about you, your law practices, and if they have any questions, how do they get in touch with you, Torben?
So go to our website. It's www.messner.com. And you can reach out to me. You can find all of our offices there. We have offices in 10 different states, coast to coast, 110 different attorneys, people who do anything that you need. And you can also shoot me an email, twelch, TWELCH, @messner.com. And I'm happy to chat with you or just answer any questions that you may have.
Thank you so much, Torben. And thank you, listeners. These IR Digital podcasts are meant to be educational resources from experienced lawyers, accountants, and financial advisors with extensive knowledge on topics you as professionals need to know about. To learn more about IR Digital and its services, please visit irglobal.com. And if you found this episode useful, please consider sharing it. Thank you all so much, and have a great day.